Hey guys, welcome back to my YouTube channel. So today's video I'm recording on the 11th of January. The reason being is because I want to record this video prior to the results. So I'm going to talk about Boohoo in this video. The results for the next trading update is on 15th of January, which is Tuesday. Today is a Friday. So I'm recording it before. Let me just show everybody as well. I'm 11th January, so we've got the update on the 15th. The reason I'm recording this before is to sort of explain my thesis going into the trading update and what I'm doing, whether I'm long or short prior to it. Usually I do not long or short, or I get my position out before earnings. I don't like to sit through earnings because as retail investors you don't really have that much knowledge about whether or not they are going to get their estimates or not. And more importantly, in this climate, it's more about their forecast and their guidance. But in this case, I am quite confident in what I'm going to pitch today. I am actually short Boohoo prior to the earnings, and I will probably buy some more, as in add up to my short even more today. Reason being is because the retail sector as a whole, bricks and mortar, are having a really tough time. Now, we all know Boohoo is completely online, which is why they've had the edge, and that's why they've been pumped up quite a lot in their stock. They've gone from 20p to £2 in like 3 years. And don't get me wrong, as a long-term stock, this stock is great. After the results, after it tanks, it might not tank, I'll explain that in a second, but once it tanks, once it get back down to levels like say £120, I'll be buying in heavy. But for now, the reason why I'm a trader, so I'm not investing, so as a trader I'm short this stock. And the reason being is because the retail sector, like I said, bricks and mortar having a tough time, but the online sector is also having now problems. And not because online is a problem, but the problem is the economic climate. So we've seen with ASOS, obviously they tumbled heavily after the last update. If you just look at their stock chart, it's horrendous. You've gone from having a dip in 2014 to recovering all of it and then losing pretty much all of that by 2018, from 2018 of March, in like 6-8 months. Now they're trading at 1x earnings. I also mentioned this in my previous videos, or how I'm actually long this stock and short Boohoo as a way to hedge. Not necessarily meaning that I'm believing ASOS is a good valuation now. I'm not recommending that, or I'm not even saying it's good or bad. I have a position in ASOS, but I'm not going to disclose what it is right now. But coming back to the point, so Boohoo, the reason why I'm short that now is because ASOS said in their last trading update that November was really tough for all retailers because there was heavy discounting throughout, and because of that, their guidance is revised, and that's why they tanked. Now Boohoo, don't get me wrong, is going to have a stellar report. They will probably show growth of around, as they would at the year end, around 40%, 38 to 40% growth from last year, which will give them about 830k annual revenue. Even then, if you look at what they are trading at, so we've got 1.16 shares outstanding. So let's look at the market cap today. So let's say at £2, 1.16 shares outstanding. That's 2.3 billion. So it's roughly trading nearly 4 times revenue. Whereas ASOS now is trading after tanking about 1.5 times tops. So the reason why I'm going to short Boohoo is because they're going to have a stellar report, but their guidance has to be revised. Because in November they would have shown that it was slowed down, but the December caught up, great. But the point is, going forward, because of the uncertainty around Brexit and as a whole in the world economy, it won't allow them to get good enough growth. And majority of ASOS Boohoo sales is 60% is in the UK. So if Brexit now is, obviously this year is the year for Brexit, but whatever deal we get, it's not going to suddenly change optimism that rapidly. It will take some time, because the process of whatever we do from Brexit will take time. Whether we leave or remain, it's whatever happens is beyond me. But that's why I'm short this, and I think a lot of people should have known about even ASOS having a tough time and collapsing. And you should have short ASOS before. And how would you have known? I'll tell you how. Mike Ashley, who is Sports Direct owner, he did meets MPs. He did a chat with the MPs after he bought up some more House of Fraser stock. Let's go videos. Yeah, so in this meeting that he had with the MPs, where are we? Sorry, 2018. Yeah, it's this one we're talking about. He made it's a whole video on YouTube. I just can't see. Oh, here it is. No, that's not it. 2016. It's basically this one, 2018 one. Sorry, but he basically goes. There's an entire video out, and you can find it. Oh, here it is. There we go. This is the video, which I'll leave in the link below as well. On 3rd of December this was released. If you had gone through and listened to this video, you would have heard him say something which was vital for the retail industry, which is that he said November has been the worst month for retailers as a whole. And that should have given everybody a hint. If a CEO of a massive company is saying that, you know it's going to be across the board, and that should be your chance to then think, wow, okay, in that case I should be preparing if I've got long positions before earnings of them, either trim them down or sell them, or even potentially like small short positions. And that's exactly what happened with ASOS. And that's why I spent my weekend that was out, listening to that, and I picked up that, and then I went and obviously researched what companies are coming up and then do so on. And now ASOS has obviously tanked. Now Boohoo is going to be next. I understand Boohoo and ASOS business model is different, but the differences are still aligned as well, in the sense that ASOS have their own brand clothing, which is fairly cheap, and they've got luxury brands, so you got the mixture of both. Boohoo has their own brands only, and he also mentioned in the video, if you watch this video, he also mentioned that branded companies, branded retailers are actually doing a lot better in general than the other ones. And the reason being is because a lot of people are just buying branded stuff rather than cheap discounted other clothes, and that's again a hindrance to Boohoo. And Boohoo, by the way, just to keep it make sure you guys understand it fully, Boohoo itself, the group is great. The company itself, Boohoo Clothing, is actually terrible. They only grow 20% year on year. Most of their sales, the reason why they're getting 50% as a group year on year sales, is because of the brands they own, like Pretty Little Thing and Nasty Girl. Those two brands are actually killing it, because female clothing all over social media, it's a great way to market it, and they're making a killing through them. So yeah, they will have a killer report, but they will tumble because their guidance will have to be revised. And even if it doesn't, and the stock price climbs up to say 220, which is the price that I'm thinking it will go to, or maybe a little bit higher, but realistically 220, if they happen to have a good report and people don't seem to see past the point, I would be shorting heavy even at this price, because this stock is tumbling down towards the levels of at least 150. Again, like I said, because of the things I've mentioned, because guidance wise they're going to have problems. And again, that's the time as a trader I'm going to get out my shorts and then look to, as an investor, buy into the stock at a cheap discount price, because the longevity of the stock is great. You know, it can become like the new, you know, they got the new Primark board guy in as well, board of directors at Primark. He was, I think he was the CEO as well briefly, into Boohoo, so he will take that business into, you know, into the same direction where he's obviously focused and fixated on discounted clothing sales and stuff. But yes, I thought I'd make this video now. So that's my prediction. After the report, I'm expecting either it should tank pretty much. I'm short still going into it, keeping it all frank with you guys. But even if it does happen to rise and it hits like 220, 230, I would probably get a bit more to my short and just hold it. I don't think I'm going to get rid of my short anytime just yet until something fundamentally changes, which it could. So just because I'm saying I'm shorting now doesn't mean you should go out and short it and carry on doing so. Plus, I'm recording this video before because I don't want people to listen to what I'm doing and do it, because that's not how you trade. And that's also I've been explaining in my previous videos, that I'm not here to teach you not here to tell you what to buy and what to sell. I'm to just teach you how to trade, how to understand the market and make your own decisions. So I'm not giving trading signals or anything like that, so rubbish. But yeah, so I thought I'd make this video now, and let's see what happens. I'm quite excited, looking forward to Tuesday. Whether the stock goes up or not, I'm fine, because I'm hedged quite well. And I mentioned in the previous video how I'm hedged, so you could watch that one. I'll leave that link in the description as well if you do want to watch that. And thank you for listening. I'll see you guys in the next video.